What's up everybody, and welcome to this special edition of our video. In today's video, we'll be talking about our Wyckoff strategy thoughts for Bitcoin, and it's very special what's happening right now in this market. We'll also be talking about technical analysis levels as per usual for the S&P 500, Nasdaq, Bitcoin, gold, AMC, dollar index, and more. Yesterday we had Papa Powell come out and he reassured the markets interest rates weren't going up anytime soon. But will it be enough? And will this Wyckoff strategy with accumulation work out? Stay tuned to find out more. All right, everybody. Well, here begins our recap for the markets for the 22nd of June, 2021. And we always have a look at this heat map of the S&P 500 large companies to get a bit of an idea of the flow that's going on with rotation. A really important concept if you haven't been doing that in your market trading and investing summaries. Now, Nvidia, Microsoft, Facebook, Amazon, we saw technology ride high yesterday, and this has been generally the trend. In fact, I'm very bullish technology right now because I think it hasn't done arguably that much for a little while. It's had the pullbacks now. Now it's the one to lead the markets, hopefully through June into July. We can see here this nice steady increase yesterday in the Nasdaq. Papa Powell coming out, talking at 2 o'clock. He didn't do anything to really worry the markets, which is great to see. And the Nasdaq ended 0.94% up. We had S&P 500 0.51. We had the Russell 2000 0.45. And of course the Dow Jones 0.2%. Not bad through the session. When we look at the sectors, and this is something we should always be looking at, our favorite sectors: technology, consumer discretionary, communications, energy, IBB, the biotech sector, were all up the biggest for the day. And this is exactly what we do expect with utilities taking another dive. Unfortunately, utilities time is not now. It's usually a mid to late cycle type of sector, and you need to be aware of those types of things. So what did Powell actually say yesterday? Well, really, he just said that he's not going to, and the Fed is not going to, raise rates on fear of inflation. And this is a pretty important factor. If he is doing something like the Fed was doing back in 14, 15, 16, where really they did nothing. They just sat there and they're like, oh, we're thinking about raising rates. We're talking about tapering, that kind of thing. That means the Fed really is unlikely to do anything too rash. And because of this, the markets say, oh, that means maybe even longer for our sugar rush of low interest rates. It's a net positive. We'll see how it holds up. Obviously, the Fed is very important to the markets, but at this stage, they're alleviating some of the fears. Now, we need to talk about this Bitcoin chart because this is great for any stock trader, any currency trader, anybody really out there. If you're trading the markets, you probably want to understand this theory, you want to understand this concept, and you also will want to study this and see how it ends up playing out because it's a pretty cool accumulation possibility here on cryptocurrencies. So yesterday, no surprise, we saw a big drop below the 30,000. Now, this could be the final shakeout here on this market, and it's very, very normal for this type of thing to occur in a lot of markets. It's that final thing that takes out the stop losses, takes out the leverage, and then we see that continuation of a potential bull trend. Now, let's talk about what happened on the volume. So we've had two massive spikes in volume down here. They were huge. Wow. Massive volume, only rivaled by that first initial crash over here on the left-hand side that we can see. So volume was up, which means big, giant, nasty whales were getting back into the market. If we look at BTC shorts here, this is, of course, where the whales hang out. This is the Bitphoenix data on TradingView. But if we think about BTC shorts, then effectively what happened is it spiked incredibly high. Let's go to the weekly. Let's think about this BTC shorts, where it got to. It got to an incredible peak. It wasn't even seen in March last year. So the whales banded together. The Chinese news obviously didn't help Bitcoin, and it all became negative again, and the cryptocurrency markets crashed. At the same time, they started taking the shorts away and angling into longs. Now, we talked about this on our Twitter. Follow FX Evolution on Twitter if you're interested, and in our Discord community. And realistically, this is exactly what you want to see happen when you're trying to find out, are the big players coming back in? Another thing we want to look at is accumulation. So if we actually look at the charts, what we've seen so far is we saw that selling climax, that initial sell-off that was, so big, so fast, so scary. Then we had what I call the dead cat bounce, which in this case is called the automatic rally in the Wyckoff schematics. And of course, in accumulation, you usually see a whole bunch of consolidation, effectively a channel, as many people will know it as, and then sometimes there's that special stop hunt event. Now, it can be called the ST over here, the secondary test, where sometimes it does make a new low, but generally you will get a new low at some point, and that will actually mark the end of and put the floor in the market. Now, we need the right things to happen after that, which we're going to be discussing now, but this is the type of thing that's exactly gone on with the Bitcoin chart right now. Let's go over the Bitcoin chart. Does that look familiar? It certainly does to me. We have our initial sell-off. We've got our initial dead cat rally, our incredible rally here. We sell off back to the same zone, rally again. We sell off back to the same zone, rally to a very similar point. We're effectively putting in a nice big channel. But what happened yesterday is really big because this took out the stop losses here. Amateur traders, big leverage positions, they would have been getting hit yesterday. The whales know this. The manipulation process is at work, just like it was at the top, just like it is in many, many currencies, in many stocks, in many commodities. This is the way that Wall Street extracts maximum data from us, the retail traders. So when we think about yesterday's candle, the daily here, a full, nice, bullish hammer rejection. If you're not aware of what a bullish hammer rejection is, it's basically a giant wick where buyers have gained commitment somewhere around this particular period. This time is a day. And they've purchased this up and, of course, closed it near the open. Now, the importance is they've closed it above 31,000. I'm very happy with what we're seeing there. Then we've seen some follow through. So theoretically, in a perfect world of Wyckoff accumulation, we'll see something like this. We'll see a little breakout above, and then we'll see what they call a spring or consolidation. Now, I call that market structure. We call it coiling here on the channel. It doesn't matter what you call it, but basically we would love to see this structure above this resistance. And as soon as we see that, oh yeah, that is going to be so positive because all of a sudden we can get through the hated zone. And where is the hated zone? The hated zone is at 42,000. If we get some coiling underneath or above the 42,000, and then that coiling breaks out to the upside, we know the base is fully in here on Bitcoin and the bulls are going to come back. Then we can be more sure about things like, of course, the altcoins, things like Ethereum and other coins that have certainly been suffering. Bitcoin is the king. It is still the one that leads the day. It's like the S&P 500 of the market, and it's super important to understand what we're looking at here. Let's go down to the 1 hour and just kind of garner some information about what's just happened on this market. So we've basically got a trough, we've got a peak, we've got a higher trough, and we've just seen a higher peak breakout past the previous little level of resistance here. And this resistance has come through the 33,000 zone. Is this big news? I think it's the first beginning of the rebuild here, and I would really hope that we're starting to get technical again on Bitcoin, and that this level down here being around the 31,000 is not breached again. We don't really want to breach it again. If we do, we're starting to break the theory. We want a nice bounce with consolidation here and now a raising of the price over the next couple of weeks back up to the 40,000 where we can start to coil up and get ready for that next move. So it's a super interesting one. Hope you guys are paying attention, and I thought that would be really worthwhile covering on the channel. So now let's resume our usual content. Firstly, we'll start with the dollar index. Yesterday, Papa Powell comes out. He discusses. Nothing really happens with the dollar index. He shoots it down a little bit because, of course, if they're not going to raise rates, that's technically not the best for the dollar index. Now, at this point, we've got a peak, we've got a trough, we've got a lower peak, and we've got a lower trough on the 2 hours. This is the point where you kind of expect the dollar index to find some resistance. Is it that strong? I wouldn't say it's a huge, crazy, great kind of trade here. I still am looking at whether this can come down to the 91.40 zone, the previous resistance, and maybe test this area. So I actually wouldn't mind it if the dollar index came down here, hit the 50 exponential moving average, the blue line here on, of course, the 4 hour, and then moved on up. It's pretty serious, I think, in terms of the way that it would look. Now, dollar index fans, a lot of you are very well aware that we talked about this 50 exponential moving average on the weekly here, and we needed to close above that. If we do, the next zone is going to be up here at the high. That's going to be somewhere around 93.40. And if we breach that level, we have a giant double bottom. And this is going to be mostly important if you're trading gold and silver, because if we get a giant double bottom and we see the dollar index start really rallying for this full distance, that's going to really hurt gold and silver trades. So just be careful out there. The DXY at the moment, I expect it to come down to 91.40. It may not, but it does look bearish at this point. It gets down to this zone, then we might find buying support, and then we're going to find out very soon, hopefully, whether we can get through 92.30 or we breach back under 91.40 and continue finding some weakness here. It's interesting times for the dollar index indeed, and there's a lot of ways to play it. Let's go over here to gold. Structure formation currently is occurring. We've been talking and summarizing about getting past 1800 for a few days is where we find the buyers back in control of this market. If the market pushes underneath, of course, this last low at 1760, then it is going to potentially move further down. If we think about the 8-hour chart here, it's pretty messy stuff, and that's why we're not really in gold in terms of trades at this point. We are seeing the accumulation. It is at the correct level, but we haven't seen a signal either way. Similar thing with silver. You'll notice here it's just hovering around, waiting for the next bit of information that allows us to get involved in what we call the participation phase of the markets. Then we've got US oil. Now, US oil is definitely acting a lot better. We go to the daily here. We have a long leg doji on yesterday's trade right above the closure. This is a great thing. Of course, this shows us indecision in the markets, but it's happening at a peak. Hopefully, we can get little movement up above this long leg doji. Once that occurs, we should be able to get towards our eventual zone of 75, 76. If you've been watching this channel for the first time ever, I will definitely consider subscribing. But on top of that, we've been talking about this level here being resistance, 72.90, which it was. You can see the sell-off. And then the next zone, that's 75, as the eventual targets here for oil. And I really hope it can get there, but time will tell whether it can. Let's get into the stock markets now and talk about these ones. So we've got GME just firstly in terms of the squeezes. We're seeing GME come to life a little bit. Did 10% yesterday at 220. I'm still looking for a 240 plus breakout so that we can be sure that we've got some structure here, formation. Volume did increase slightly. The chitter chat on the Twitters, stock twits, Reddit, etc. was improving on this one, and that was good to see. Some of the other squeezes did better yesterday, things like Clov and some others out there, but realistically, AMC also bounced off the 52.30, which is great because we theorized yesterday that that could be a very important point for the bulls and the bears. See how you're in a channel here on AMC? You really, or double top it was yesterday potentially. If we close underneath this zone, where does it go? $40. That's what I'm thinking. If it closes now above this zone, you can take this distance, which we've already got on the chart here. You can extrapolate that out, and it actually causes a new high, but I'd be very careful around the 72.59 anyway, and that would be sweet. So yeah, looks okay, acting a bit more technically, great support there. These lines seem to be pretty important to the chart. We'll quickly go through Tesla. Tesla still grinding higher up here, still looking for a 635 break close above. We've still got our trend line in play. Nothing new to report here, so we'll skip over that, but I just thought I'd bring it up. We've got the US 100 breaking out at the top of this trend line up here, and this is a great looking chart right now. It's showing the strength that we knew could be there. Let's go and look at the QQQ to get a bit of an idea. You know what, guys? Long leg doji, decision made. Is it closed? No, but it certainly is moving on up and through. This is the type of thing that just really permits the US 100, the Nasdaq, from going up further and further and further. And we've got theorized kind of highs here that we're looking for as well. So you can see the resistance, well, makes sense that this will probably be resistance again. How long away is this? Let's do the quick percentage finder. It's about 5%. So if the Nasdaq's going to go and put another 5% on, that would be really beneficial. But should we be concerned at this level? I think we should definitely be very, very cautious. We're optimistically bullish here on the channel for this at the moment. The right signs are coming in. Yes, there's a whole bunch of indicators that are showing shorts. Yes, the breadth of the market is not healthy, meaning that not all stocks are going up with a rising tide. It's mostly a few sectors that are doing well. Healthcare, biotech, communications, and of course technology are doing the best, but that's okay. It happened last year, and we all know what happened in August as well. The market fell off, so we'll be watching that together on this channel. When we go and have a look at this US 500, some people would be saying this is an inverse head and shoulders time. We've got the left shoulder, we've got the head, we've got the right shoulder, and we've broken out after Powell's speech. Yeah, it looks pretty okay. And when you're thinking about it, you know, if you're presenting this kind of inverse head and shoulders and we extrapolate that out, does it make sense to anything that we've seen recently? Does it make sense to possibly our top of the trend line? I think it may. Let's just quickly do this together right now. Or not quite. So it's only presenting part of the puzzle, but it is certainly bullish. We know that if this S&P 500 starts rallying and breaks through this previous resistance again, that the only thing that really stops it after that point is hitting the top of our community trend line, which is incredibly good. Look how good this trend line is, guys. Amazing stuff. And if that happens, then hopefully we will see the opportunity to possibly take some profit and get off the market at that point. But you know what? It's still looking okay. It's still looking bullish. If Powell's saying we're not going to raise interest rates for quite some time, we don't care about inflation, we're not concerned, blah, 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 then realistically the market has the trigger to go through one of the best months of the year, which has historically been July, bullish. So hopefully it occurs, we get through that point, and then after that, maybe we're going to get some bearish signals come into the market. If people are wondering where do you go bear on a market like this, really it's as simple as see these two rejections here on the weekly for the S&P 500. That point there, if it did close below, I think the bears would be in full control of the market. So it's a little while away, but that's the exact area where the bears really start to get control and really push this thing right back down. US 30, here we go. This is a pretty important kind of chart as well. We saw the trend line get hit. We saw the daily, of course, hold through. It's a lackluster index, this one, the Dow. I think that it could still kind of like chill round. Maybe it'll move up, but this does have weaker sugar rush stocks in it. It's got the banks. It's got, of course, Caterpillar. It's got some other things that are doing well off initial gains in the economy and, of course, the cash flow that's coming through. So it's not my favorite right now, but I thought I would bring it up. Things I also want to bring up, I am doing a special event for Pepperstone, just teaming up with them and, of course, talking about AMC, GME, and cryptocurrencies. I think it's going to be a great event. I'm doing this 7 p.m. Australian Eastern Standard Time on the 24th of June. So for people in the US, it could be early, but if you want to wake up, come and check us out. I'll put the links in the description and comments down below. And come and remember, hit that bell as well if you want to come and support me at the event. Should be good. Thanks so much, everybody. Hopefully you enjoyed this video. It's a long one, but we got through some amazing stuff. Good luck to each and every one of you out there. It's going to be some great sessions coming forward. See you soon, and remember to hit that subscribe button. Bye for now.